All right, so my name's Julia Robbins. I'm a Senior Vice President with CAMCO. With us this evening, we have our controller with CAMCO Management, Iryna Alexowski. I'm sure some of you may have been in communication with her at one point or another, and I do recognize a few familiar faces here as well. So thanks for joining us. This evening, we will be going over understanding our financial reports from CAMCO that you are receiving on a monthly basis, and also ways to maximize your interest income and how we can kind of keep track of that through our financial reporting. So Iryna has a presentation to review with you, but it is a shorter presentation and we welcome your feedback. We have a smaller group this evening. So if you have any questions, comments, feedback, please feel free to either put it in the chat, or we should also have plenty of time to take questions and comments throughout as well. Just raise your hand or go ahead and unmute yourself. So without further ado, I will turn it over to Iryna to get us started.
Good evening, everyone. So I will start just going through some of the financial reports that you see on a monthly basis, and kind of, give you a little heads up of things you should be looking at, more important things on the financial statements, and then we'll get into the interest piece. So our monthly financial reports are fairly standard across the board. So the first cover page you're going to see is the narrative, followed by the balance sheet and statement of revenues and expenses. That is also known as the profit and loss statement or income statement. Different people refer to it differently. It's the same report. So the top three I will go into a lot of detail in the next couple of slides. So I'm not going to touch too much on them, but just to touch on some of the other reports that you see in your reports on a monthly basis. They're going to be the ownership transfer report. So that report is going to show you any resales that happened in your community in that month. So if somebody sold a unit, you're going to see the old seller, the address, the buyer's name, information, regarding that sale. Following that is going to be the AR aging report. If you're one of the lucky communities, hopefully you don't have any AR aging. Everyone pays their fees on time and you don't have to worry about it. Unfortunately, that's not reality. Sometimes payments are lost or for whatever reason are not made. You will see that information on the AR aging report, basically a delinquency report. If there's anything happening, if they're with an attorney on a payment plan, that information is also going to be on that report. So you're going to be able to track that. The following report after that is going to be the AP aging. So that report is basically going to show you any invoices that have already been recorded and are on your financial statements, but the physical cash has not been paid out yet. So if we received an invoice August 31st, it's highly unlikely that the payment's going to be made that same day because it takes time to process it. So likely payment's going to go out early September, and in that case, it appears on the AP aging report. Cash disbursement report, this shows you all of the physical cash that has left the association's account during that month. So again, it could be payables from prior months, could be payables from that month, basically any cash, any transfers that happened during that period. The following report, and probably the longest in your whole financial package, is going to be your GL trial balance report. So this gives you detail of every account in your financials. So if you're looking at, for example, in your income statement, why your landscaping is $5,000 over budget when you're on a contract and you want to see that detail, that is going to be in the GL trial balance report. It's separated by month, by account, and you can pull all the detail there. And then all the way at the end, you're going to have the bank account reconciliation and the bank statements. So we reconcile all of the accounts on a monthly basis to make sure everything's recorded, full transparency, your financials are accurate, nothing weird is going on. So that report you're going to see as well. You're going to see that it's in balance with our system versus the bank, and then followed by the actual bank statements as well. If for whatever reason you want to see anything, NCB, the logbox account, also provides check images. If you ever want to see an image of the check, that will also be all the way at the end of your report. So to get more into the details of it, so like I said, the first cover page is going to be your narrative. This is a report we manually put together for associations as we think it provides a lot of useful information at a quick glance. So this is basically a summary of the whole package that you have. So if you're ever busy, you don't have time to review 50 pages of your financial reports of the details, and you just want to see where the association is currently for this month, this first page should give you majority of the information you need. So on the top, you'll see the operating results, the first box. This is basically a summary of your income statement. So very short summary, you're just going to see the income for the month and the variance, as well as the year-to-date income and the variance. And then the same thing for expenses. You're going to see the month-to-date and then the year-to-date numbers. So this association for the year is in a deficit of 3,436. So again, depending on your association, if you have operating reserves or not, it may be, a big deal and something that you need to look at and kind of resolve sooner than later. Moving down into the cash position, this section's gonna list out all of your bank accounts that you have and the balances in those bank accounts at month end. This piece I'm gonna talk a little more in depth about once we get to the interest income part of the presentation. But these are basically your bank balances at all institutions. The next section is accounts receivable. This is again that delinquency report that we spoke about. This just gives you a summary of month-to-month comparison. So if historically your association doesn't really have a delinquency problem and all of a sudden there's a $10,000 AR balance, something to kind of pay attention to. If you're not aware, you can ask your manager, you can ask your accountant, like, what's going on? Where's this balance generating from? Because, the more people that don't pay, the bigger problem it becomes for the association in the long run. So we really try to keep this number low. The next section, unpaid invoices. So this gives you your total accounts payable and any accrued expenses. So again, the bills received but not paid, they're already reflected in your financial statements, but the actual cash has not left your bank account. And then accrued expenses are basically estimates. So to give you an example, most utility companies bill behind. So in August, they'll send you a bill for July. Well, if we're producing August financials, we're basically estimating what that August billing will be. So the accrued expenses are estimates. A lot of the times for utilities, sometimes for contracts. If there's a landscape contract, sometimes they'll bill for August services on September 1st. Typically, if it's a contract, we know what that amount is, and we're able to add that estimate into the financial so you have an accurate monthly, visual of how you did that month. The next couple of sections are going to be your reserves. These are my personal favorite sections of this report. It makes it very visually easy to figure out how much money you really have in what fund. If you get into the balance sheet, you also have that information, but you kind of have to do some mental math to kind of figure out what you have exactly. So this is a nice, clean number that you have. So for this association, the operating reserve status, they're at 61,306. That combines their prior year operating reserve and their current year net income. So that negative 3,436 reappears here in your operating fund. The reason I said it wasn't a huge deal for this particular association is because they had a prior year operating reserve of a positive 64, so it still nets to a positive number. But again, something to keep an eye on and be mindful of moving forward through year end, because we don't want that to be anywhere near zero and most definitely not a negative number. Recently, we have seen this become issues with resales. Some lenders do not want to lend if an association has a negative operating reserve. So again, this number is very important to keep an eye on. And if you have any questions, you can always reach out to your manager and or accountant, and they'll kind of walk through, the steps, if what needs to be done, if there's an issue, how we can kind of rectify it moving forward. The next two sections, contributed capital and capital reserve, are both part of the capital reserve balance. So it has prior year information and current year. Depending on your association and how it's set up, you can have your contributed capital separated, like in this example, or it could be combined with the capital reserve status together in one box. They're both part of the capital reserve. So again, preference wise, how it's set up. Your contributed capital reserve expenses are those that happen from resales. If somebody, buys into the community, they typically have to pay a capital contribution fee or of whatever that is set up by your documents. And then the capital reserve status, these are the monthly fees that we're kind of putting away for your reserve study into your savings account, into your reserves. So when a project comes up, next year, 10 years from now, whatever that may be, you have the proper funding to pay for it at that time, and it's not a scramble to find the money. And then the last box, there's no activity for this association, but if you had any capital expenses happen during the year, if you got your roadways repaved, new roofs, new siding, any like large capital projects, they will be listed out individually in this bottom box of capital expenditure so you can see exactly where those funds are going. So one report, but a lot of information on there, a good summary of all of the whole financial package. The next one is the balance sheet. So this just goes a little bit more into the detail from the prior report, but like you'll see in the top, you have cash, which again is very similar to the narrative. It shows you all your bank accounts with the balances. Next is going to be your prepaid expenses. So most of you are going to see prepaid insurance. Typically insurance is paid on an annual basis and then expensed monthly or in some sort of installment plan. It's typically not like a month to month billing payment. So most of you are going to see a prepaid insurance. And then you're going to have potentially prepaid federal taxes and prepaid expenses. So sometimes if you have contracts for like an elevator or some sort of maintenance, those could be paid on a quarterly basis. But again, we're trying to get a clear picture of the month only. So in that case, it will be sitting in the prepaid account until it needs to be expensed. Accounts receivable, so you just have the total here. It was also listed on the narrative, and there's also a separate report if you want to see the details of who the 245 is related to. Moving on to the liability section. So here you're going to find any prepaid assessments. So those are basically any homeowners that paid in advance, accounts payable, any sort of potentially fees, accrued expenses, things like that are going to be listed in the liability section that need to be paid out at some point in the near future. And then the last section is equity. So like I was referencing in the narrative section, this has all of your operating and capital reserves combined in this one section. So it's a little difficult to to figure out, oh, how much do I have in my operating reserve? I mean, this one's easy. We can add the 64,000 minus the 3,000 to figure out it's 61. But other associations have more accounts, bigger numbers, it's more difficult. So that's why the narrative gives you a nice little screenshot of the exact total you have in those accounts. This report, I think most of us spend the most time on. It's the income statement. So the first three sections are going to be your month-to-date actual budget and variance. And then the next three sections are going to be your year-to-date actual budget and variance. And then all the way towards the right hand side, you're going to have your annual budget. So you can kind of see where you're falling in regarding your whole year budget. So in here, what I typically do, and I recommend everybody does, is go through and make sure, to look at any large variances. If there's a 50-cent variance or a $7 variance, not significant. Again, with utilities, it's hard to, guess exactly how much the bill is going to be for. So you're obviously going to have small items come up here and there. But in this case, landscape contract, you could see we only had budgeted 4,625, but the bill came in at 12,760. So that's, for me is a red flag. Let's dig into this. Let's see, what's causing this variance. Was there extra maintenance that had to be done that wasn't included in the original contract, wasn't originally budgeted? Was there a storm that kind of took a tree down that needed to be cleaned up. There's obviously going to be an answer for why there's a variance, but I think it's important, to know what those issues are so we can plan properly for the following year's budget. And again, to look up the differences or pull up the variances, you would use the GL trial balance report. You would find the GL account number. In this case, it's 5,000, 59,000. And then you would see all the detail, what composes that $12,000 balance. Moving on slightly to the interest piece of the presentation. So there's different types of accounts that you guys will have in your association. Everyone will have a checking account. It is used for your operating fund. It's referred to as the logbox account. So this account is used for all funds coming in and all funds leaving the account. So it doesn't matter if we're paying a Pico bill, if we're paying an engineer, or if we're paying, for road work, roofs, everything comes out of the logbox account. It's a checking account. It does not earn any interest at all, 0 interest. So whatever money you have in there is just operational. The next two accounts are interest-bearing accounts. So you could have a money market, which is going to be a part of your reserve fund. The benefit of having the money market is you have flexible access to funds. You can easily transfer in and out and still earn interest. Small disadvantage of the money market in comparison to the CD is the rates are typically lower because it has the flexibility. CDs or certificates of deposits are also your reserve funds. Rates are typically higher, but the funds are locked away for a fixed term. So if you're going to need the money 6 months from now, we can't really put it in a 12-month CD because then you're going to have to pay fees and penalties to pull it out. And it probably is going to eat away at the interest, the extra interest that you would earn versus the money market. So it's extremely important when deciding what account we're using to look forward and see what large projects are coming up, how much money we're going to need in the near future to make sure we don't overinvest and get ourselves in a situation where we then have to pay fees and penalties. So CAMCO, we have a banking coordinator, Lou, who works with us, who kind of helps us go through these investments and make recommendations. So on a weekly basis, he puts together a rate sheet of the current rates. Rates do change fairly quickly, sometimes in a positive direction, sometimes in a negative. So we try to get an updated rate sheet on a weekly basis just to kind of keep with the trends and give you the most accurate information at that time. But again, these could be the rates today, they could be different tomorrow. They could change at any point. So this is just estimated rates at the time that this is put together. But you can kind of see on the top section, the money market rates are 3% for regular money markets, and then top money market sweep offerings, so you have to have a larger minimum balance, are up to 3.25. And then if you go down lower, you'll have your CD offerings. So you could see, depending on the term, they go over 4%. I think 4.12 is the highest as of last week for a 3-month CD. I typically recommend, some boards get a little worried investing a lot of money into the CDs because obviously you never know what's going to happen. I typically like a staggered approach. So if you have, let's say, $500,000 that you want to invest, I would put 100,000 in a 3-month, 100 in a 6-month, 100 in a 9-month, and so forth. So basically every 3 months you'll have a CD coming due and you'll have funds coming in. But you'll still be earning interest. I also like investing as far out as possible because tomorrow, if the rates drop, let's say if we invest for 24 months today, we're locked in at 4%. If the rates drop tomorrow to 0.5%, it doesn't impact you. You're still locked in for those 2 years. Versus if you don't lock in, then you're kind of stuck at that 0.5%, not earning a lot of interest. So this is something that we have available. Managers and the accountants have access to this. You could request it at any point if if you have interest in changing any, money markets that you have, investing any more money, things like that. Feel free to reach out to any of us and we'll be able to provide this and kind of assist. And then the next slide goes into a little more detail. So this is, let's say, a CAMCO condo association. The top section we have shows the current financial institutions that we have. Um, so there's money with PNC, Wells Fargo, and Fulton. Currently, at the interest rates that these banks are paying, the estimated annual interest is just about above $9,000. So what we would offer in this situation, we would provide you with two options. Option number one would be to keep the money fully in a money market account. So it's fully flexible. You could spend it, you can pull it, no penalties. If we were to do that, put all the 779,000 into a money market, your estimated annual interest would be 25,000. So a significant increase from the 9 that we're currently earning. Um, if we wanted to put some money in CDs and kind of lock the rate in for a longer time, that would be option number two. So then in here we could see we're putting 300 and almost 90,000 in a money market, and then the rest we're putting in two CDs. And then that annual estimated interest is 28,000. So almost 20,000 more a year in interest you could be earning instead of keeping the money at PNC, Wells Fargo, and Fulton. So we obviously have, a lot of banks that we work with, financial institutions. We try to get the best rates for our clients. The rates are not dependent on us. We can't, make any guarantees as they change daily. But we do want to, provide these services to you and make sure that, you're earning the most that you could possibly earn. We don't want the money just sitting there if you're not using it, not earning any interest. A little side note I do want to add here, aside from, the presentation in regards to interest. Interest income is taxable for condos and HOAs. So if you're going to earn a lot of interest, there will be a tax bill come year end. Just as a heads up, because a lot of associations are used to not having to pay any taxes, and then they earn a lot of interest and get hit with a tax bill, and they're like, oh my God, like we've never paid this before. What do I do? We didn't budget for this. But end of the day, let's say if you have a $30,000 interest and you're going to pay, 5,000 potentially in taxes, it's still 25,000 more than you had beginning of the year. So we still recommend it, but I did want to kind of mention it so you have it in the back of your mind so that if you're earning a lot of interest, there's going to be some sort of tax implication year end. Any questions from anyone? Comments, feedback? James, I think you're on mute if you're speaking.
You've mentioned the operating income and expenses. With regard to the capital, I've been a little disappointed in the reporting on capital expenditures because they've really just identified what's already been spent as opposed to what's, there's really no ongoing analysis of what's available, what's coming in over what was originally expected, and so on. So I just wondered, is there have you heard that before, that there's not as much analysis of the capital spending aspect as there is on the operating budget?
So yes, there isn't as much reporting on it because typically it's based off of your capital reserve study. We kind of go by the, expenses on your capital reserve study. Obviously the actuals can come in different, but the income piece is typically budgeted one time a year. There's going to be no variances versus what was budgeted. So if you budgeted 100,000 for capital reserves for 2026, that number's not changing. Nothing additional is coming in during 2026.
Well, that's what I'm wondering, whether there's a way to, let's say you've got 5 or 6 different items at the beginning of the year that you're planning to spend on. And then out of those 5 or 6, for X, Y, or Z reasons, one of them goes away. There's no really easy way to see that on a month-to-month basis. And as a result, you know, the spending might be over on 4 or 5 projects, but the one that's not getting done is making up the difference. There's no way to really see that. That's what I'm wondering, whether there'd be a different reporting mechanism to allow seeing which projects are under or over what was originally forecast.
Yeah,
James,
so
James, I guess I phrased that question in terms of, is there such a thing as a cash flow report? I'm told the answer so far is no. But I agree, when capital expenditures are recorded in the CAMCO system, it's kind of easy to lose them.
So if you have a current capital reserve study, the accounting team does have capital reserve budgets saved out as well. You can reach out to your accountant directly for your association, and they'll be able to put together a comparison for you of what we've spent versus what was in the capital reserve study. But again, this only applies if there's a current capital reserve study. If we have a reserve study from 2015, I mean, we can't really compare because all the amounts are so significantly different, or even like 2019 pre-COVID. So we can, your accountant can do a direct analysis for you and provide that for you directly, but there's not a report that's generated by the system at this time.
Yeah, I also just want to add, Iryna, so we're mentioning the capital reserve study, and just as a rule of thumb, they should be updated every 3 to 5 years. If you're a community that has a lot of capital components and you're doing a lot of projects, we even suggest updating it even more frequently than that. And the firm that you utilize, they're able to just do an update for you where they don't have to visit the site. They don't have to. It's typically called a level 3 study, and it's typically way more cost effective. And we can give them that information like, hey, we plan these 5 projects. Here's what the study said that they should cost, but we actually, we came in under on 3 of these projects, and they can reset out the funding necessary for the following, whatever it is, 30 years typically. So.
Hi, this is Phil Friedrich from Highgate in Hershey. I recently retired from 30 years in financial services and contracting and strategic sourcing. Let me ask a question regarding capital expenses and operating funds. And does CAMCO or your financial advisors have a clear definition of a capital expense, which in these modern times is very unusual, if we do, and what comes out of operating funds versus capital expenses?
So it's a lot of it is going to be dependent on your capital reserve study, what the engineer, has in there, also what your documents state the condo or the HOA is responsible for. But typically anything that's a replacement, extending the life is going to be capital. Anything that's going to be, maintenance type items that aren't really, extending the life or increasing the value, they're going to be operating. You're on mute, Phil.
Yeah, thank you. Operating funds, maintenance, general fix and move on types of expenses versus capital, which is the funds. It's a permanent issue that it deteriorates over time. And I'm smiling because I've been associated with a number of very large companies which have very creative definitions of capital and operating funds. So, but that's good. I appreciate that. Thank you.
Sometimes if you get an audit too, it can be up to the auditor when they're reviewing it to say, hey, I'm flagging this. It's not really, it's not really a capital expense. It's more of a maintenance item. Another thing that I think gets flagged pretty often is painting projects, because the IRS doesn't really deem painting as a capital expense. It's more of an operational expense, but for some of your communities, we can spend upwards of $10,000-$20,000 for one painting project, and it does extend the useful life of what it's covering typically. So that's one of those arguments that happens pretty often too. So there are creative ways to title things sometimes if necessary.
Yeah, and I'll follow up with Olivia, our manager. We just finished one $19,000 plus project of rainwater disposal, concrete repair, piping replacement, and we're about to embark on another one. It's not going to be for one of our 6 buildings, and we're about to embark on another one. It's not going to be quite that expensive, but it's probably operating funds, but it's coming out of our capital reserve because that's where we have the most money.
Yeah, those sorts of stormwater and drainage projects are there's two sides to the argument as well with them. I've seen them in multiple reserve studies. I've seen, allocations for drainage. So you can really kind of encompass some of those projects in there. It depends. Another one that comes up pretty often with some board members is trees, tree replacements. Typically the auditors we've worked with say, that's operational, right? If you're removing and replacing a tree. But again, we have some communities that have hundreds of thousands of dollars worth of trees, and they do a large project to replace them. So some of the engineering firms or reserve advising firms that we get the reserve studies from will incorporate that as a line too. So.
I have a question.
Sure.
My question is in regards to the fees, when you're late, like late fees, lease fees, who has the authority to raise that? Is that CAMCO or is that a board decision?
That's going to be outlined in your documents, what your late fee policy is. So that's not something we will be able to change. It would have to, the documents would need to be amended.
Okay, so we just have to amend the documents?
Yes.
Okay.
And Maria, sometimes it depends on your document. So sometimes the bylaws or the declaration will outline the specific amounts.
Mm-hmm.
If that's the case, it's a much more difficult process to update it.
Okay.
Most of the time it will just say, it will give the board the authority to set that amount. And then you just need to have a board resolution or policy in place to update it, which is much easier because only the board needs to approve it instead of the entire community.
Okay. We were just curious. That's all.
Yeah, absolutely. Angela, I think you have a question. You're muted.
Thank you. Good evening, everyone. My question is the interest income. Would that be reported on the statement of revenue and expenses, or would it just be reported on the bank statements?
So it will be on the balance sheet. It will be on your bank statement, but it would also be in your financial reports in the balance sheet under the equity section. There would be an account labeled current year capital interest earned.
Okay. Thank you.
Any other questions?
Just to comment, Phil, I share your pain, or James, I share your pain with the capital expenditures tracking because we struggle with that all the time, particularly in our audit takes a very different approach than what CAMCO does on categorizing expenses. So we always have to have discussion.
Yeah, and there's no right or wrong answer. depending on what fishbowl you're in.
Anyone else?
Okay.
Well, thank you all for
All
joining
right,
today.
thank you.
If you guys have
Much,
any
Iryna.
questions related directly to your community, feel free to reach out to your accountant and or manager. I am available for all of you at all times. So if you're not comfortable with your accountant, you can come directly to me. I will take a look and let you know my thoughts, my recommendations, and help you out as needed.
Okay,
Thank
Thank
you.
thank
you
you.
all so
you very
much for
much.
joining us this
Thank you.
evening. We hope to see you on a future educational session, and thank you for serving your communities as well.
Before you go, you said this call is being recorded. And I think I also seen something. Is it going to be on YouTube? Because I couldn't figure out where I read that from.
Yeah, we do. We have a YouTube page. If you search for CAMCO management. So we have like a playlist that will have our different webinars on there. So we do get it posted there. But I am the meeting organizer, so you should have my email. It's jrobbins@camco. If you want the recording sooner, just let me know and I can send it along.
Okay, thank you.
All right.
Thank
Thanks so
you.
much, everyone.
Thanks, everybody.
Thank you very much.
Hi, if I
Goodbye.
could ask you, I didn't
Yeah.
come in till later. Is there somewhere I can get it from the beginning?
Yes, that would be from me. So here, I'll pop in my email here in the chat for you too.
Okay,
Just in case you can't find it on the meeting invite. Just shoot me an email and I can send you the link right after the meeting. It should be posted to the YouTube channel, but sometimes it takes a couple weeks for our marketing team to get it on there.
Okay.
So if you want it right after this evening, just let me know and I'll send you.
yes, I do. I do want to watch it now, so I'll just send you an email.
Yeah,
Okay,
Yep.
thank you.
great.
Well, thank
Thanks,
you.
everyone.
Thank
Yeah.
Have a good evening.
Have a great evening. Bye
All right.
now.
Good night.
Bye.